Welcome to Solve My Tax Problems TV, and in today's episode we're going to discuss what causes an IRS tax problem in the first place, and we're also going to answer a question from one of our viewers. Stay tuned. Hi, this is Larry Weinstein, your host of Solve My Tax Problems TV. And in our first segment, we're going to discuss what causes a tax problem in the first place. Tax problems are really caused by two main categories of problems. The first of those problems is when a taxpayer files a tax return and there is a balance due, and they don't remit payment with the tax return. If you owe money to the IRS, they have a very sophisticated collection system. They use computers. They're not very much unlike any other bill collecting agency. And as such, once you get into their system, they're going to keep sending you reminder notices, each one a little bit more threatening than the first, until finally they will issue a final notice of intent to levy, after which time they would be able to garnish a paycheck or levy a bank account. So that's the first problem that might occur, is that you file a tax return and there's a balance due and you never address the problem or you never pay the bill. The second main problem that I see is if somebody doesn't file a tax return. Now, if the IRS feels that you are required to file a tax return and you don't file a tax return, they'll also send you some notices asking for that tax return. And if you don't send in the tax return, eventually what they'll do is they will prepare what's called a substitute for return. And a substitute for return basically means the IRS will prepare the tax return for you. They typically will file the tax return with you listed as a single person, when in fact you might be married with dependents. They won't claim any deductions for the dependents. Another problem really occurs is if you got any kind of 1099 income, either because you were self-employed and got a 1099 or you had stock transactions. In either of those instances, when the IRS prepares your tax return, what they're going to do is they're going to put in the total amount of 1099s that you received and call it income, even if you had people working for you, wages, rent, cost of sales, those types of things. They're not going to give you credit for any of that. And secondly, if you get a 1099 from stock transactions, you might have had $10,000 or $100,000 worth of proceeds from the stock. And that's exactly what the IRS will put down as your proceeds, and they will call that your net gain, because they're not going to make any attempt to try to determine what was your cost basis in those stock transactions. So when they prepare those returns for you, very likely you're going to have a much larger tax bill than you really should be if you file the return. That's it for this segment. Stay tuned for the next segment, when we're going to talk about one of the commonly asked questions that I always get from clients. Welcome back, and in this segment we're going to answer a question that I hear all the time, is what's the best thing for me to do as a taxpayer if I receive a bank levy? Well, a bank levy is where the IRS actually goes into your account and they actually give a notice to the bank, and the bank goes into your account, and what they do is they put a hold on your account for the amount of the tax that they feel that you owe them. Okay, so the money is actually frozen by the bank, and the bank freezes your funds for 21 days. The IRS basically is going to give you 21 days to solve the IRS tax problem, to come up with some kind of acceptable solution to them, either to pay them in full or to enter into an installment agreement or to get an offer in compromise or get your account classified as currently not collectible, something like that. So one of the things that you need to do, because the money is really physically still at the bank for 21 days, but the bank basically has frozen your money and won't give you access to it. So the first thing that you need to do, in my opinion, is if you otherwise have the possibility of getting money from some other source, is I would put money into your account as soon as you can. Why do we do that? Well, the answer to that is really quite simple. What we're really going to do is put more money in the account, because as far as the bank goes, when the IRS freezes that money, they freeze the money in your account, and it's as if you have no money. So if you have any outstanding checks for utility companies, for mortgage companies, any checks that are outstanding at all, those checks will be dishonored by the bank, because as far as the bank is concerned, you have no money in your account. So the first thing that I would do is I would deposit money in your account. If you put money in your account after the bank has frozen your funds and levied it per the IRS, those monies will be safe from levy. Now the IRS can always come back on a second levy if they would like and levy those funds, but if you put money in immediately, you should be fine. Secondly, I would work very quickly, because we only have 21 days from the time that the bank receives the levy notice from the IRS for us to resolve the problem and get the levy released. That's it for today's episode of Solve My Tax Problems TV. I hope you found this to be of value. Please, if you have any questions, I probably won't be able to answer them personally, but submit your questions to me and you might see your question answered in a future episode. Stay tuned for next episode, where we're going to talk about the 7 steps that I go through to help solve an IRS tax problems on behalf of my client. Thanks, and have a great day.